Now here's what might sound crazy to some of you. Getting a mortgage here for us ended up being super simple. It actually was a very easy mortgage to get. But there's a reason for that I'll share with you. It didn't start that way. In fact, I'll tell you how it started. We went to a bank. I won't say what bank, but it's a big bank here in the Dominican Republic. And we provided all of our documentation for the property that we were buying. Now, mind you, we were putting down like 45%. So a nice down payment on this property. It's in a neighborhood that has incredible value, meaning, the next closest house to the one we bought was $200,000 more. It's listed $200,000 more. The house we got it because there was an outstanding title issue that was taking a while to resolve. We were patiently waiting for that. Most buyers didn't want to do that. And just a relationship with realtors here got us in on this property, and we waited on it. We were looking at this property for over a year and a half, or about a year and a half, before we ended up getting it under contract and closing on it. So we found a great property in that regard. So we go to the bank and we say, hey, here's me, here's my income, here's our history, here's all the documents. In fact, if you want all those documents, they're right here. You can hit pause or just click that link below and it'll all be in there for you. It's everything literally that I had to give them. I put it in like a Google Drive and gave it all to them in one spot. The mortgage amount, like the monthly payment, based on the terms that we were going to get with this bank, were less than the rent that we've been paying. Less than the rent we've been paying here in DR. So we've got proof. I could show them, like, we've been paying this much every month. We're going to pay less with you as far as getting this mortgage. And still, it was a back and a forth and a back and a forth. And hey, you know what? This is a big one. We're only going to consider 10 to 30% of your income. That's all we're going to consider. No more. So if you make 200 grand, we're going to say we're only going to consider $20,000 toward the analysis of your debt to income ratio. It's like, what are we doing here? Maybe 60 if you're making 200 grand. If you're making 300 grand, it's 30 to 90. If you're making 100 grand, 10,000 to 30,000 of your income is all they were going to consider in terms of calculating our ability to make payments. So they're only considered 10 to 30% of my income for the purposes of giving me a mortgage. Crazy. We actually got them past that. And mind you, this is months ago. We got them past that. We got them to say, okay, you know what? We see this, we see that, we're good. Let's move forward. We're going to consider all your income. Like, great, let's do it. As we're getting closer and closer to the time of closing, or the time of, I'm sorry, not even closing, but final approval, they tell us, hey, actually, what we need you to do is put another 10% down. We'll give you a little bit better rate. We got another 10% down on the property to make us feel better about it. And I was like, oh, okay, if we need to, we will. I don't want to, but that's fine. And then let's move forward. Is there anything else? Nope, you're good. Okay. As we get closer, they ask me this one question. Hey, Jamie, your adjusted gross income year 1 to year 2 on your tax return went down. Why? And I explained, oh, well, that's not my gross income. That's the adjusted income. Like, I could show you the exemptions that I applied for and got that reduced my taxable income. But here are the receipts showing that my income is the same. They're like, oh, okay, thank you. They came back a second time. Jamie, we need a clearer explanation on why your income looks like it's less here than it was there. And I was like, okay, let me show you. This is how much I made in this year, right? Yeah, we see that. Okay, and this is how much I made in this year. Yeah, we see that. It's the same, right? Yes. Okay. But in this year, I was able to file for certain exemptions, or I was able to expense certain things on my business that I didn't do this year. So it's showing my taxable income is less. They're like, oh, okay. They come back a third time. We're still waiting for a good explanation as to what happened. I'm like, all right, I'll tell you what. Let me go to my accountant. My accountant gives me a really good outline, explains it, screenshots, boom, right? And I say to them, here you go. Here's a full detailed explanation. Like, oh, okay, thank you. So I'm thinking, here we go. They came back a fourth time. Jamie, we still need an explanation on this. Now, here's where I'm going to flash back in a second just to tell you what happened. By this point, we had secured a different mortgage, not directly with a bank. And that's the secret to this. This is why it ended up being easy. We didn't use a bank to secure the second mortgage. I'll explain that. And it's going to be, and I'm also going to give you access to the person or people that helped me make this super easy. I'm going to prove to you how easy it was. I said to this bank who came back for the fourth time, you know what? Keep your mortgage. And I'll tell you what, it felt good. It felt so good to tell them, I don't need it. You keep it. I don't want it. I got another one. And they were like, oh, okay, thanks. Done. The sad part is the bank that we said no to did have the best rates, probably the best terms, but everything was just a pain, the whole stinking way. So what happened? The realtor that was selling us our house said, hey, Jamie, I think what you should do is consider a mortgage broker. In fact, I've got a great one I can refer to you. You should talk to her. She's really knowledgeable. She knows the whole area, but she's an independent mortgage broker. She's worked at 7 of like the 14 top banks in the country in her career in the mortgage department. She knows them all. She knows all the players. She knows everything about the industry. I'm like, okay, sure. This was on August 29th, 2025 that I got a text connect to a woman named Paula. Unbelievable. August 29th. Now let me flash forward real quick. We signed the closing documents on October 20th. And we didn't start the process when I first started talking to her. So we're talking from the moment I met this person to the moment we signed the paperwork to close was a little less than 7 weeks. It was like 48 days or something like that, maybe a little bit more than that. It was super, super short. I haven't gotten a mortgage in the US that quickly, to be honest with you. Or maybe I have, but I'm not remembering. But it became super easy, and I'll explain why. All right, now I'm saying that these mortgages are easy, but they are different than the United States. So let me level set that a little bit. In the US is extremely unique. The US is a little bit looser on lending, and they're the only country that I know of, there might be one more, but like probably not. They're the only country I know of that fixes your rate for the entirety of the mortgage. 30-year fixed rate, 15-year fixed rate. When I secured this mortgage and people messaged me, they're like, oh, yeah, but DR doesn't have fixed rates. And my reply is like, no. What you should say is the US is the only one with fixed rates. DR and most other countries fix the rate for a period of time. They'll have the same amortization, potentially, 20, 25, maybe 30 years if you're Dominican. The 30 years if you're Dominican, 20 and 25 if you're not. But the rate might only be fixed for 1, 2, 3, 5 years, maybe 7, depending on what you negotiate with a bank. So the rate, if it's like 8%, you're only going to get that at that rate for 5 years, and then it floats after that. Okay? So every country, Canada, the UK, everyone does it that way. The US is unique. The reason why, all or most of the mortgages that the US gives, the banks give, Fannie and Freddie instantly give the bank back the money they just loaned out so they can go loan more, and then the bank actually gets paid by Fannie and Freddie to service your mortgage. So banks in the US, as long as they follow Fannie and Freddie guidelines, they don't have to worry about this mortgage having the money out of their bank coffers for the next 30 years. These banks do. Every other country's banks essentially do. So that's why it could be quote unquote harder or more scrutinized. One of the reasons why it's more scrutinized in DR versus abroad. So just keep that in mind. All right, let's go to the mortgage broker for a second, because these people, Paula and her partner, were absolutely incredible. And if you want access to them, there's a link down below. Click it, fill out their intake form, and talk to them if you're thinking about getting a mortgage, if you're in the process, or you have a pre-construction property down here, you got to get a mortgage for the other half. Once it's done, talk to them. Here's the difference. They took my file and they said, okay, what is going to be concerning to a bank with the knowledge that we have of the banking system in DR? And what is going to be really attractive to a bank with the knowledge that we have here in DR? If you think about it, like if I put 10 different or 20 different documents across the table, when I did that and was giving it to a bank, I just lined them up. Well, there's all 20, right? What the mortgage broker does is say, hey, here's the 5 we want you to see first, get you excited. Then we'll show you these 5. Then these 5, and then the worst of them are the things that they think are the most concerning to the bank. They'll show them at the end, but they're getting them sort of like geared up for. Do you see why this is a good loan for you to take? By the way, just so you know, there's also this, but go back to that first thing I showed you. When you line them all up, you give the bank the choice on what they think is good or bad about your loan. When you have a mortgage broker speaking the language and putting in order the right things for the bank to see and helping you set up your, your documents in such a way that it's the most attractive presentation to the bank, it changed everything. Again, 48 days. So here's what I learned. My US credit score is very attractive. It is to certain banks. I wasn't emphasizing that. That was a throw-in to me when I was dealing with the banks themselves. Doesn't mean every bank wants a US credit score, but there were certain banks the mortgage broker knew was looking to loan to people like me, and they knew that a credit score from the US that's very good would be a positive for me and positive for me getting the loan. My point is the mortgage broker was able to position the loan really, really well. The broker eventually got me these terms: 10.5% interest, 20-year amortization, and all of what I asked for being funded, meaning I didn't have to put any more money down. I was already putting money down, 40, 45%, whatever it was. I was already putting that money down. I already put that money down. So the rest of it, they agreed to finance. But then in addition, this bank agreed that if I wanted to, they would roll in the 3% transfer tax. This is like 20 grand. So they rolled that transfer tax into the mortgage if I wanted to. And I said, yeah, I'll keep that money because we want to do some things with the house to improve it and, some furnishings. You know how it is. You buy a house, there's other expenses. So not only did they give me all the money I asked for, but also they allowed me to roll in the transfer tax to keep more money in my pocket at the time of closing. Crazy. Then I went to the mortgage broker and I said, okay, that's great. I love the terms. It's a bird in hand. I remember my wife and I were at dinner at a place called Pepe when we got the call or the text from the mortgage broker like, hey, you're fully approved. I'm like, approved? Or like, approved until they want something else. She's like, you're approved. You just have to say, I accept or don't. Reply to this email I just sent you. Do you accept? If so, all we got to do is schedule a closing. Like, wow, amazing. That was super, super simple. I said, but is it worth us going back to the bank and saying, hey, 10.5%, kind of steep on a US dollar mortgage. Can we lower that a little bit? I was thinking a quarter point, maybe a half point, like 10%, if I pay the $20,000 transfer tax out of pocket. Don't finance that, but get my rate a little lower. And she goes, let me talk to them. She messaged me back the next day and she goes, I have good news. Yes, they'll lower the rate and they'll lower it to 9.5, so a full point. And they don't need you to change anything in terms of the loan amount. You could still roll in the transfer tax. I was like, whoa. So pretty much you made a call and knocked 1 full point off of the mortgage. She said, absolutely. Wow. Super cool. The value of a mortgage broker. I didn't know about them. I didn't even know they had them here. But oh my God, I spent months before that with a specific bank who I won't name, going back and forth, actually 2 of them, going back and forth and just getting like wanting to bludgeon my head off a wall with everything that they were asking for. It was the same story everybody told me. Dominican mortgages are hard. I'm like, man, they're right. When I went to the mortgage broker, different story. Now keep in mind this. People are wondering like, oh, well, that's so simple. Yes, however, different than the US is one of the things that are different than the US. You pay the mortgage broker. They get paid by you. They end up being paid 1 to 2% of the mortgage. The lower the mortgage, the higher the percentage. In other words, a $100,000 mortgage is probably a 2% fee, $2,000 that you pay the mortgage broker to get this all done for you. The higher the mortgage, the lower the percentage, but you could work that out with them if you decide to work with them. They do charge fees along the way, but it's like, hey, for an initial analysis, it's like $100 or whatever it is. But at the end, once you close, any fees you paid up to that point are deducted from the 1 to 2 points. So in the end, you end up paying 1 to 2 points, 1 to 2% of the mortgage amount that you get to the broker. So just be aware of that. But money well spent to keep my sanity, and to get the mortgage, to get a mortgage that we really, really wanted. So that's my case for the mortgage broker. Now, I want to share more specifics, little nitty-gritty things that you may not be aware about. All right, here's the first thing. Many mortgages, and this might be only if it's a USD mortgage, not a peso mortgage, but many mortgages require that you have 2 different types of insurance. Number 1 is property insurance. I went and got a property quote. I got it from a broker that I use who specializes with expats, and he gave me an additional 10% discount for my inner circle. So any member of my DR inner circle gets 10% off insurance products where applicable with the mortgage broker that I refer. But you can use them, you just won't get the 10%. Down below, you can click on it if you need travel insurance, whatever. I think travel insurance is the only one that you're not gonna get a 10% discount on, but it's super cheap. But property, home, health, all of that, he's got access to 10% discounts he can give to inner circle members only. That's something I worked out with him. But you can use them even if you're not in the inner circle. You're gonna need property insurance. Our property insurance policy will cost us, after the 10% discount and also a pay in full discount to the company, about $4,200 a year. Now, I wanted additional liability. I wanted certain things in the policy. We might have been able to get it cheaper, but our home value combined with what I wanted in the policy made it a little bit more expensive. Still, when you consider the taxes plus the insurance, way less than what we were paying just for taxes in the United States. But that's one insurance you'll need, property or homeowner's insurance. The second one that you'll often need, and this may only be on a US dollar mortgage, is life insurance. Here's a couple things. The life insurance that the bank wants to give you is specifically for the amount of the loan with them as the beneficiary. We ended up going that route. It's costing us $1,300 a year, dollars. So about 100 and change a month that we're paying for a life insurance policy with the bank as the beneficiary when the mortgage is paid off, which we plan to do in a few years. Our plan is to aggressively pay off this mortgage. When it's paid off, that mortgage or that insurance policy goes away. I'll keep the property insurance, but we lose that life insurance. You can request an exception for your own life insurance policy in the States to be the policy that you put up. However, you're going to need to add the bank as the beneficiary. For me, I didn't want to do that. God forbid something happens. I want our life policy to go to my wife and kids. I don't want it caught up in any bureaucracy. For me, for $1,300 a year, absolutely worth just whatever. I'll pay your life insurance policy here, bank, and we'll go with that. Here's the other thing. When the bank quoted us a property insurance policy, they wanted to charge us $600 per month for whatever property policy they found. So check out my guy, Victor. Click that link, go talk to him. And again, if you're not in the inner circle, jump in. Not only do we have that discount, but restaurant discounts, legal services discounts, and an incredible community of people that are engaging on the daily in our WhatsApp and Facebook groups. We're getting together in person. We have bonus content, live Q&A with me. Amazing, amazing. Just check out the website down below and you can review it and hopefully you jump in. All right, here's some other stuff you need to know. And I'm sure I'm gonna miss some things, but I'm gonna give you as much as I can. You need to hire the appraiser from the bank. The bank has to approve the appraiser, but you need to hire and pay the appraiser. We paid $325 for, I believe, one appraisal. Yeah, and then we had to pay an additional $100 for the other two appraisals because each bank needed the appraisal addressed to them. So first bank, we paid $325, and then the other two banks, same appraisal, different language, we paid an extra $100 for each. So $525 for all three appraisals. Also, you do not need to be a Dominican citizen. You can get a mortgage in DR as a US citizen without any Dominican citizenship. Might be a little harder, might be a little bit more scrutinized. Having a Dominican spouse with a SEDULA helps. The first bank was asking me for proof that I was applying for residency, even though that meant nothing. It had nothing to do with anything. That going back to it, it's simply because when they asked if I was a citizen, I said, no, but I'm applying. Then they were like, oh, if you're applying, prove it. If I never said that, they wouldn't have asked for it. I told the mortgage broker that. That was information they knew didn't need to be presented to the bank to make this any harder. See what I mean? Like the mortgage broker saved me from myself in some ways, which is crazy. So you can get a mortgage as a US citizen. You cannot get mortgages on pre-construction property. People keep asking that, like, oh, can I just get a mortgage? No, you deal with the developer. Once it's done and a title is issued and you owe whatever you owe, then yes, you can get a mortgage on the balance, which is why it's good to engage with these ladies now, even if you're closing in a year or two, to prepare your file. If there needs to be any repair or any positioning, they can make sure that your file is presented the best way to get the best terms from the best banks. And lastly, you can get a peso mortgage or a dollar mortgage if you earn in dollars. But for me, the dollar mortgage was more favorable. The interest rate goes between, you can get on the low 8.25% with a bank that is a pain in the butt to deal with, all the way up to probably 11.5% with a US dollar mortgage. Peso mortgages are going to be more like 14 to 18%. As far as the terms, for a non-Dominican citizen, you can get 20, maybe 25-year amortization. For a Dominican citizen, you can get up to 30. Now, there might be some programs, by the way, all of what I'm saying, you may find a bank that gives you the exception. It's not like the US where all banks behave the same. So I'm giving you generalities, and then you'll find banks. Asociación, I say that wrong, de Cibao, I hear a lot of good things about. Promerica, I hear a lot of good things about. There's banks out there that do pretty well. However, not all of them have the same things, but this is generally accurate. 30 years for a Dominican citizen, 20 to 25 for amortization for a US citizen or a non-Dominican citizen. Also, for down payment, if you're a Dominican citizen, you could put as low as 20% down. For a non-Dominican citizen, it's going to be 30% down minimum. But here's the thing. Even though you can, doesn't mean the bank will accept that. Banks may be like, yeah, the program says you could put as low as 20% down, but based on this property and your income and everything else, we need you to put 35, 40, 50% down. So talk to the banks. They all do it a little bit differently. In addition, if you're a non-Dominican citizen or non-Dominican resident buying, if you don't have a cedula, essentially, buying here, you will need to go to DGII, which is the Dominican IRS, to get an RNC number, a tax ID number. Now, I went to DGII to get this tax ID number, and you know what happened? They gave me a whole bunch of work to do and come back later and everything else. What a pain. My lawyer suddenly was like, oh, bloop, there it is. There's your RNC number. So again, hire a great lawyer. Guys, look, down below that link, I have my lawyer, my realtors, my mortgage broker, my insurance broker, The developer I'm working with, there's referral links to all of them below if you want to use any of them. Do your own due diligence. Know that they will all likely compensate me in some way if you decide to work with them, but they're all down below and they've all been great for me, and I personally use all of them. Now, after all that, some of you might be thinking like, my God, there's so many fees and costs and all of this. And by the way, we still have, I think it's like $3,000 or $4,000 that we paid in closing costs. It's a percentage of the mortgage, right? So you're going to have closing costs. You have the appraiser. You have a transfer tax. You have all these different things. So you do need to be aware of the cost of getting a mortgage here for sure. So Jamie, why do it? Well, here's why. Many of you might calculate ROI, as do I, on an investment property when you're investing in it for something to get in return. But here's the ROI for me. It's the Christmas tree that goes up every winter in September in the Dominican Republic that my family and I get to take pictures around every time we open presents the next day. It's the nights that our kids aren't feeling great and we get to play in their bedroom on an iPad or read them a book and, enjoy that time. It's the memories they're going to form as they go into their later, single digit years, their 12, 13-year-old years. It's high school. It's all of that. The ROI for me is I get to have a home for our family to grow up in. Financially, sometimes things make sense, like don't pay off a loan that's 1% for your car. But then there's like the sleep at night side of it that's like, I don't care about the 1% loan on the car. I just don't want to have a payment. That's okay too. And that's my logic. It was worth it to me not to find a house in a community that we liked but didn't love and pay cash for it. It was worth it to me to go for the mortgage. It was worth it for me to get the house that we truly desired for our family. And you all have to calculate that for yourself. How much is that really worth it for you? If it all is about numbers and ROI and fees and too much money down, then buy something cash. And trust me, if I had the cash, I would have bought something cash. I'm being completely honest with you on that. However, for me, for this, for us, we're looking at it like we could afford the payment and then some. If the rate goes up, we've got room. We've got the ability to buy the home that we love in the neighborhood that we love. We're buying a property that's $200,000 below the next similar property, 4-bed, 5-bath. Next similar property is almost $200,000 more listed right now. And it's in a neighborhood that is only going up in value over time. It may have its bumps, but in general, it's going to go up over time. That's what we decided to do. You all have to decide what you do for you. But I'll tell you, when the bank came back with an appraisal above our asking price or above our sale price, I thought, man, they're crazy conservative. And if their conservative is still above what we paid, that makes me happy. And when the bank is taking care of all the title stuff, all of that, along with my lawyer, again, I feel really secure in what we're doing. And in the end, guys, and this might sound, I don't know, dismissive, it's just money. I love money. I love what it does for us, for my family. I love the ability for us to have the best in a country that not everybody does. We can buy insurance policies and private clinics and private schools and all of that. We live great down here. We love it down here. We love being part of this culture, part of this community. We love donating, giving back to this community. So we love it down here, but it's just money. In the end, I guarantee you, if you were told tomorrow that everything's going to go away, you're going to be taken away, you won't see your family ever again unless you give every dollar that you have, you'd give every dollar that you have, as would I. So money is replenishable. Time, memories, none of that is. And I hope that this isn't time that you want to replenish. I hope you got a lot of value out of it. If you're looking and deciding on whether or not Punta Cana is a spot for you, click this link right here and watch this video. Yes, it's about retirement, but really there's some keys in there for anybody trying to consider what part of the country to move to. Take a look at that. I'll see you on the next one.